Hello everyone. Welcome to an exam paper solving for Thomasson and Company. So Thomasson and Company is a December 2018 paper, and we're going to discuss about it in the exam paper for advanced audit and assurance. So in this question, we have to first of all note down, first of all, what are the question requirements. So if we go to the question requirements, we find that it's in two parts. So here it talks about discuss the policies and procedures which Thomasson and Company should have in place in relation to an anti-money laundering program. And the second part, indicators of money laundering activities by either company or its staff. And the other part will be comment on the ethical and professional issues arising from your review of the audit working papers and recommend any actions which should now be taken by Thomasson and Company. So here, what we should note clearly is that we're talking about, we should note clearly on the verbs that have been used for the question. So here, in this part, they've talked about discuss. And this part also, they've talked about evaluate. And this one is about comment. So this clearly should guide you on what you should be doing, especially on the mark allocation. Because as you can see here, the mark allocation is 4 marks, this one is 6 marks, and this one is 15 marks. So these will guide you, these marks will guide you on the timing, because for instance, like in the 4-mark question, it should just take you like 7 minutes to answer this, and these others will also be a different time. So all you have to realize is that the appropriate time that the examiner allocates is one minute and 8 seconds for each mark. So that means that this one will take like 7 minutes. So the entire paper here will take like 45 minutes. So here on discuss, and you should, on all these questions that have been asked here, you should also note down your why. Why is that as your answer? If you're writing down the point and identifying your answer, you should also know to write your why in that answer. Like, why is that your answer? You should also know how to write your because of that. Why this is the answer. So the to talk about it even further, you should also know that it is good to actually first of all get not just put your knowledge into the answer, but also apply that knowledge that you know into the case scenario in this case. Because even though this is talking about money laundering, it's not a time for you to just talk about all what you know about money laundering, but it's about you should note down the key points that you know so that you can apply it to the question. So if we should go quickly to the question, we're talking about Thomasson and Company. You're an audit manager in Thomasson and Company. So Thomasson and Company here is the auditing firm, and you've been recently assigned to the audit of a client called Clean Co. for the year ending 30th September 2008. Clean Co is an unlisted company and is an unlisted company. Sorry about that. Is an unlisted company. Is an unlisted company and has been an audit client for a number of years. CleanCo is a national distributor of cleaning products. The company buys the cleaning products from wholesalers and employs a team of approximately 750 sales staff around the country who sell company's products to both domestic households and small to medium-sized businesses. Around 70% of the company's sales transactions are cash based. And each of the company's sales staff prepares a cash sales report on a monthly basis. According to CleanCo's chief executive Simon Blackers, and in order to foster an entrepreneurial spirit among staff, each staff member, including the senior management team, is encouraged to make cash sales and is paid on commission basis to sell the company's products. Mr. Blackers leads the way with this scheme and recently sold cleaning products with a value of $33,000 to a business associate of his and has transferred these funds directly into an offshore bank account in the company's name on which he's the sole and he's the sole signatory, as you see here. So, review of audit working papers. Here it talks about your review of the audit working papers and an initial meeting with Mr. Rogers have identified the following potential issues. Following your sorry about that. Following your review of the audit engagement letter and the working papers of the taxation section of the audit file, you have established that Thomasson and Company performed the taxation computation. You established that Thomasson Company performed the taxation. You established that Thomasson and Company performed the taxation computation for CleanCo and completed the tax returns for both the company and Mr. Blackers personally. So Mr. Blacker's personal tax return includes a significant number of transactions involving the purchase and sale of properties in various international locations. So here we have involving during your initial meeting with Mr. Blackers, he informed you that CleanCo is planning to develop a new website in order to offer online sales to its customers. He has asked Thomasson and Company to provide assistance with the design and implementation of the website and online sales system. Okay, as a result of your audit review visit at the client's premises, you have learned that the audit team was invited to and subsequently attended CleanCo's annual office party. The client provided each member of the audit team with a free voucher worth $30, which could be redeemed at the office party. Was the team which could be redeemed at the venue during the party. The audit senior, Paula Metcalf, who has worked on the audit for the last 3 years, has informed you that the audit team has always been encouraged to attend the party in order to develop good client relations. So you've seen that I've been highlighting some points here throughout the question because I already know what I'm looking for here. Because from the questions that we have been given, you've been told about policies and procedures which Thomasson and Company should have in place in relation to anti-money laundering and evaluate whether there are any indicators of money laundering activities by either CleanCo or its staff. Then we talk about comment on the ethical procedures and ethical and professional issues arising from your review at the audit working papers and recommend any actions. So in this situation, we have this part B, we have and here. So we have to also note down on these, on the and factor here, because they're saying you comment and recommend. So here there are two call to actions. There, that which means comment and also and recommend. So that's why you see that it has more marks compared to these other two. So if we go through the entire into answering the first part, discuss policies and procedures on which Thomasson and Company should have in place in relation to an anti-money laundering program. This is where we are going to talk about money laundering itself. So first of all, we realize that what money laundering is, from our knowledge and understanding, is that it's a process of concealing the true origin of illegal proceeds. So here, money laundering, we already know that it has 3 key stages where there's placement and there is layering and also there's integration. So here the point is policies and procedures for anti-money laundering program. So here, from your knowledge, you are able to pinpoint that they should have a money laundering reporting officer who has an appropriate level of experience and seniority. So that is one key factor to note down for this audit firm. This is called Thomasson and Company. So they should have a MLRO, who's in long form it's money laundering reporting officer. So they should have established an anti-money laundering program within their firm. So that firm should appoint that money laundering reporting officer with the appropriate level of experience and seniority. So the other part that we're going to talk about is that the audit firm has to establish internal reporting lines which should be followed to report any suspicions. So they should have those internal reporting policies as well. And the other part that we also note down is also that in that internal report that we've talked about, they should also have should clearly have typical content, which includes the name of the suspect, amounts potentially involved, because when it comes to money laundering, there has to be like a paper trail of the amount that is suspected to have been laundered through the company. So those are typical things that you can be able to note down, because this clearly needs to that question actually needs you to actually know about money laundering and what anti-money laundering programs that the audit firm should put in place. So this is kind of a straightforward question, which requires you not to do not fall victim to dumping all your knowledge into this question. Just go straight to the point by just noting down the key policies and procedures that you have noted down from your knowledge of money laundering, like the ones that I've said, like appointing a money laundering reporting officer, having the established internal reporting lines, and having content in that is standardized for that internal report, like let's say the name of the suspect, amounts potentially involved, and reasons for the suspicions, with substantiating evidence, if there's any, and the whereabouts, the whereabouts of the laundered cash. And also there should be, if there's any individual in the audit firm who has suspicions of money laundering activities, then they're required to disclose those suspicions to the money laundering reporting officer. And the other key policy that you can talk about is also about the receipt of the internal report. Like the money laundering reporting officer must consider all circumstances surrounding the suspicions of the money laundering activities. So there has to be documentation that has to be done by that money laundering reporting officer. So those are key structures. As we said, it's a formal question, so you should go straight forward to the point and don't dilly-dally around it. Because it's straightforward and you can get carried away with just writing as much as possible. But this should be straight to the point and also explain your why. Why should there be that money? Why should there be a money laundering reporting officer? So you should say they should clearly. It's part of the program, the anti-money laundering to have a person who has the necessary appropriate level of experience and seniority. And also on the part where I talked about receipt of the internal report, it's whereby the money laundering reporting officer must consider all circumstances surrounding the suspicions of the money laundering activities. Why should they consider it? So that they can document that process and decide whether to report the suspicions to the appropriate external authorities. So we're going to move down to the second part, which involves evaluate whether there are any indicators of money laundering activities. So as I said in the first point, that this too is also a straightforward question, but we should be very careful on how we're going to put down that question, because it talks about evaluating. So in this, you can talk about the money laundering. You can talk a bit about money laundering. Like you could just introduce the key aspect of money laundering. What is it all about? So here you could talk about money laundering being an act of concealing the illegal proceeds of, of, um, of a criminal activity. So in this case, for clean company specifically, whereby you use that knowledge that you know into putting this into the question, whereby I noted down some key points. So here you could talk about that what are the key indicators. You have to evaluate what are those key indicators. So here, when I noted down here, you see around 75% of clean companies' sales transactions are cash-based. So it shows that this is a cash-intensive business. So this will involve, it creates a significant risk, whereby whereby a person can easily place that they can easily place their illegal proceeds into this business, because it's just cash based, so there is no like any sort of like process where you can have a paper trail into to knowing like where this money came from. So in this case, since it's cash based, so it can be easily be passed off as legitimate sales if you're doing a money laundering scheme. So here in this case, to be specific, to talk about the indicators, you can talk about Mr. Blacker's case, whereby I wrote it down, I highlighted it again to show that Mr. Blacker's sale to a business associate for 33,000. It's you should say that this is an example of placement, because we know like placement is actually mixing the illegal cash proceeds with legitimate cash receipts. So in this situation, it can be an example of placement of illegal funds. So in this situation, based on, you can just see like it's kind of suspicious, like putting this 33,000, the size of the transaction in a business selling clean products and the round sum amount, that could be it can be suspect for a money laundering scheme. And in another case whereby we have to also explain, like where I also illustrated here down below. Okay, so another indication would be on the international property transactions that we have noted them down here, whereby we talk about, okay, so yeah, whereby we talk about where Mr. Blacker's personal tax return includes a significant number of transactions involving the purchase and sale of properties in various international locations. So this could be an indicator of money laundering. Like as we can see, there are so many significant transactions involving the purchase and sale of properties in international locations. So that part you have just identified, right? You've identified the indicator, but you have to explain why. And this is whereby you say these transactions may be examples of real estate laundering by Mr. Blackers, because as you can see, he was purchasing these properties. So it's a clear indicator of placement, whereby he may have used illegal cash proceeds to buy those properties, and then he sold them in order to make the funds appear legitimate. So I hope you're getting the connection here, that he had to buy using his illegal proceeds, his alleged illegal proceeds, and then he has to purchase. Then after that, he then sells them in order to make funds appear legitimate. So this is integration. So this is another stage of money laundering, which is integration, whereby the illegally obtained funds are moved back into the legitimate economy. So that's an example of integration. So also, like here we talked about, also there's a part where he talked about like he was doing these transactions regularly, like we say, like involves a significant number of transactions. So these this high volume of transactions also be indicative of layering of transactions. So this other layering, in this situation where we have a significant number of transactions, it shows that it's an indicator of layering, whereby cash is disguised by passing it through complex transactions involving many layers. So making the transaction very difficult to trace, especially if you're doing international, if you're moving the cash internationally. So it will make it a complex process. So this is what we call layering, putting it through many layers, a line of complexity, making it difficult to trace. So that is what you can put down in form of your question for part A1 and part A2. So we're going to move to part B.